Understanding your home insurance policy can be difficult. So many coverages, so many limits, so many options. What does it mean for me, and where does it all come into place? Well, in today's video, we're going to talk about coverage D, your loss of use. Hey guys, Mike Crowley here with the Crowley Insurance Agency, where we make insurance easy with honesty and common sense. Coverage D, loss of use. This is usually calculated on your policy with either a limit or words that say actual loss sustained. Now, if you have a limit, it is a percentage of your dwelling coverage. We talked about it in some of the other videos we did regarding these types of coverages built into your home policy. But loss of use, again, will be a percentage of your dwelling coverage. This might be 20%, 30%. Each insurance company could use a different percentage. But another way that they label or include this coverage is on an actual loss sustained. This is now, instead of a limit, it's based on a time frame, usually up to 12 months. So there's no limit on the amount they'll pay, but there's a limit on how long they'll pay, and it's usually up to 12 months. Where does this come into play? Well, this comes into play if you are taken out of your home in the event of a claim because you no longer can live there while it's getting repaired, fixed, or even rebuilt. Perfect example to this is if there's a kitchen fire and you no longer have a kitchen to operate in while it's getting rebuilt. You need to spend a few weeks in a hotel. This is going to chip in and pay the extra expenses that you incur while you are out of your house. This will be the hotel costs, maybe the laundry at the laundromat, or the extra cost of eating out each meal. Now, for larger claims where you need to rebuild your house, insurance companies will usually have you rent a house or an apartment versus paying hotel costs. This is how, or part of how the coverage is worded in your contract, and it talks about making sure that you are moving the claim along and you're not milking, staying in a nice 5-star hotel while things are getting replaced. They are trying to get you back to your normal living status as soon as possible. Now, loss of use only comes into play on your primary house. Whether you are the homeowner and living in your primary house or you're a renter that is renting an apartment and you have a renter's insurance policy that has this coverage. If you have a landlord's policy and you have tenants that live there and there's a claim, this coverage limit is not going to pay for your tenants to go live in a temporary location while it's getting rebuilt. That is the responsibility for them having a renter's policy to kick in to protect their interests, where your policy is only protecting your interests. Now, if you have a landlord's policy, you might still see coverage D, loss of. A lot of times it might not say loss of use, but if it does, it still means the same here. It's loss of rents. This is where you will get reimbursed for the rent you lost while you are repairing or rebuilding or refixing your place so that your tenant can move back in. Now, hopefully this helped explain a little bit on the loss of use coverage that's built into your homeowner's policy. If you've got any questions regarding this coverage or any parts of your home policy, feel free to reach out. We appreciate you watching, and we'll see you again soon.